After a nice run higher for the equity markets this past week, are they really healthy? The markets finished the week higher in what appears to be a healthy move. Last week I said, look, before you go jumping out of a first floor window, wait until we see how next week plays out. The metrics aren't at a level where I'm worried yet, but next week will paint a more complete picture. We'll just have to sit tight and wait for the markets to play out. Well, we got our confirmation that the markets are looking healthy, and hopefully they'll continue higher from here, barring any unforeseen negative events. But the current metrics aren't saying full steam ahead. At the end of this video, I'll review how things look going into a short week next week. Let's look at how the markets performed and what our current metrics are telling us. As you can see, last week, the markets looked very healthy. We had ARK Invest up the most, small cap second, S&P third, and then the Dow and the NASDAQ eked it out for fourth place. So this is a pretty healthy rally with the risky ARK stocks up the most. What about over the past month? Well, this looks very good. You have ARK up the most, NASDAQ second, S&P third, small caps followed by the Dow. This looks great. And what about year to date? Well, we've had a very healthy rally year to date. You can see the riskiest stocks, ARK and NASDAQ up the most, well ahead of the rest of the pack, and the Dow coming in last. This is what you want to see. And if we look at the equity bottom dynamics, you can see we've had a very nice, healthy rally here, a little bit of a pullback, followed by a nice run up at the end of last week. But there's something here that gives me a little bit of pause going into this coming week. You can see that the bottom confirmation is rising, but the confidence level is falling, while the safety confidence is rising. This tells me the markets might take a breather next week, but there's really no way to tell. I'm just telling you what I see in these metrics right now. We'll have to see what happens. But if we look at risk versus opportunity, this is very healthy. You have the risk level well below 80. Here it's roughly about 64, 65. That's not a place where I would be concerned. Equity risk acceleration is down here below 50. This is great. Now, both of these are pointing higher, but I don't read too much into that until the levels get to a place where I'm concerned. You also have the opportunity level rising, and it's well above 80 here, probably at 85, 86. So this looks really, really good. And what about equity versus safety? Remember, this gives us a fairly short-term view into the health of the markets. Well, first of all, look, and you've seen this if you've watched my videos from previous weeks, the NASDAQ 100 is sitting up here in the number one position, and it has been for about the last 10 or 12 weeks. It's been there for a really long time. This is great. Now, last week I was concerned because there was somewhat of a flight to safety here with long-term treasuries and 20-year treasury bonds moving up and equities moving down. But you can see here that now we have the NASDAQ in first, S&P second, small caps third, Dow fourth. This is fabulous. And what about cash? Well, cash was down here in fifth position, moved to sixth, moved back up into fifth, and is staying right here in the middle of the pack. This gives me no concern at all. And you can see we have a very healthy treasury market here with the longer duration treasuries ranked ahead of the shorter duration treasuries, with the exception of intermediate bonds and very short-term treasuries. These are inverted, just like the yield curve, and gold is dead last. This tells me there's no risk of inflation and there's no perceived geopolitical risk, even though there is a lot of it out there with the war in Ukraine. And how does this show up in the buying and selling pressure? Well, if we look at the buying and selling pressure, you can see just from the price charts, the Dow shot up through the roof last week. And you can see the selling pressure was really high here, and it has since collapsed. The S&P, similar picture, very high selling pressure that's collapsed. But you can see as we go into the NASDAQ 100, the selling pressure didn't peak out as high as these other two, and it has collapsed and the price is moving higher. Same with ARK. Selling pressure collapsing, didn't reach as high a level as, for example, the Dow, and the price moving higher. So this tells me that investors were selling the safer stocks, the Dow stocks, and putting money into the riskier stocks. This is a fairly healthy picture going forward. And what about small caps? Well, if we look at small caps, you can see that the price has been choppy. We had a pullback, but a very nice rise here in the last week, and the selling pressure absolutely collapsing. Now let's take a look at the sector rankings. These give you a longer view into the health of the markets. And if we look at last week, we had Bitcoin, technology, consumer discretionary up here, semiconductors here, innovation, ARK innovation up here, and consumer staples, cash, and treasuries down here. Well, let's move to this week and how do things look? Well, I like the fact that technology and consumer discretionary are all up here. Now, innovation has fallen off way down to here, and cash and consumer staples and treasuries are all down here. So this looks very, very healthy overall. And what if we look at sector rank acceleration? Now, this gives you a shorter term view because these move much more quickly. And when I combine what's going on here this week with what I saw in the bottom dynamics, this is what gives me a little bit of pause that the markets might take a breather next week. But let's take a look at what we're seeing. So if we look at last week, we had Bitcoin up here at the top. Remember, I was concerned because consumer staples were way up here at the top. We had healthcare and utilities. These are safe haven assets all up at the top. This is fairly unhealthy looking. And if you remember, again, I said in my video last week that I thought the markets might move lower, which they did on Monday, but then they took off and headed higher. And I also said that was a risk. So this gave us a pretty clear picture of what might happen early on in last week. Now let's fast forward to this week. This looks healthy with Bitcoin up here, which is a risk asset. But we've got cash and treasuries way up here. Now consumer staples have fallen off, but so has consumers discretionary. So I'm not convinced here that this is looking really good going into this coming week. We have to just wait and see what happens.
Hey, I got a confession.
And if we look at the price action of treasuries over this past week, you can see they were kind of flat to nowhere and then dropped off on Thursday and really rallied back on Friday. So kind of a flight to safety on Friday, even though the equity markets were up. So we'll see where this takes us. What if we look over the past month? Well, if we look at the past month, there's been a very healthy rally in long treasuries and no action to downward movement in the shorter and intermediate treasuries. This is good for the treasury investors. And if we look at year to date, again, these have kind of gone over this longer period, kind of up, a little bit up, but nowhere, right? So we'll have to see how this plays out going forward. But I still think these are priced relatively attractive compared to where they were back here when they were bottoming out in these two areas. And what about that yield curve? Wow, this is not good. So you remember back here, we were inverted 1.1% or 110 basis points way back here in March. Things sort of tried to correct themselves, but never got even close to being uninverted. And now yields have just risen at the short end and not gone up enough at the long end. And again, we're very, very inverted here. 106, almost 107 basis points inversion. This is insane. And I think it's due to the fact that the Fed is being very hawkish and saying they're not done raising rates. And you can see that reflected here in the Fed rate monitoring tool. There's now an 86, almost 87% chance that the Fed's going to raise short-term rates another 0.25% or 25 basis points when they meet at the end of this month on July 26. There's only a 13% chance that they'll stay flat. We'll see how that plays out because I see inflation moderating and it's starting to show signs of that. So there's a lot of time between now and July 26 for the Fed to change their position on this. Not saying they will, but we'll have to see. And how does this show up in the buying and selling pressure for Treasuries? Well, you can see the shorter duration Treasuries had a lot of buying pressure here, but you can see the price action didn't correlate with the big increase in buying pressure here. In fact, buying pressure has since fallen off and the price has dropped off. This indicates higher yields going forward, which is what we're seeing indicated in the yield curve and in the Fed rate monitoring tool. If we go out to intermediate Treasuries, similar picture. The buying pressure wasn't that high here, and you did have a little bit of an upward move, but prices have started falling again. What if we go out to intermediate to long Treasuries, 7 to 10-year Treasuries? Well, you can see we did have a little bit of a rally here, but again, prices fell off and then came back on Friday. And then if we look at the long bond, you can see we had much more of a sustained rally here, with prices falling off at the beginning of last week and then moving higher at the end of the week. And how's gold looking? Well, not much here. Declining price, big increase in selling pressure here, which has since fallen off, but is still well above the buying pressure. And there was a little bit of a price increase at the end of the week, but nothing really to talk about here. And how about Bitcoin? Wow, well, you know we had a huge rally here, and you can see the buying pressure went off the chart and has since really collapsed. So I think Bitcoin's taking a breather for the moment, but that doesn't mean it's going to start falling. There's enough good news with Fidelity trying to create their own Bitcoin ETF. BlackRock's trying to get their Bitcoin ETF approved. So if those become approved, that gives legitimacy to Bitcoin going forward, and that could drive this price through the roof. But until that happens, there's really no way to tell which way this is going to go. Look, over the past week, the equity markets went up really nicely, while the Treasury markets fell slightly. This is a healthy move toward risk and away from safety, and I'm glad to see it happen. But going into next week, the bottom dynamics and the sector rank acceleration readings are showing the equity markets might just take a breather here. Crypto appears to be tapering off after a dramatic run-up, and with Fidelity and BlackRock announcing their intentions to create Bitcoin ETFs, there could be even more upside down the road. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
It's just not everything you promised. Running down, trying out. What did you say? What did you say when I told you? Maybe this wrist wasn't gold proof. Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold, but it's lonely, yeah. This life feels like the sunny water.